Good afternoon, everyone. This is Dawn McKnight, and I am the Executive Director for the Independent Association of Home Instead Franchisees. On behalf of the IAOHIF, I would like to welcome you to the first of our webinar series titled Insurance 101, Know Your Exclusions with Dennis Powers of InZone Insurance. InZone is a vendor partner of the IAOHIF. Before we begin, I have just a few housekeeping items to share with you. If you have a question, you may type it into the chat box at any time. Questions will be answered throughout the presentation. Before I hand things over to Dennis, I'd like to share some information on his background. For over 27 years, Dennis has been in the insurance industry, beginning his career as a private investigator, specializing in investigating fraudulent insurance claims against employers. He then spent over 10 years prior to becoming an insurance agent, working as a multi-line claims adjuster with a primary focus on workers' compensation claims. He is currently an insurance agent working with small to middle market businesses. He is a graduate of Western Illinois with a degree in criminal justice. In addition, he has attained his associate in risk management, associate in claims, and is a senior claims law associate and a chartered property casualty underwriter. He has specialized in the design, marketing, and implementation of a client-oriented insurance program. He also provides an expertise in applying the appropriate resources to help his clients contain costs by managing their exposure to risk. His clients include manufacturers, social service agencies, distributors, contractors, and other companies. Dennis has been with Lamb, Little & Company since March of 2009. He lives with his wife, Jill, and one child, AJ, in Mount Prospect, Illinois. Now I'm going to hand it over to Dennis to start the presentation.
Thanks, Dawn. How's the audio? Good? And can you see this presentation just to make sure?
Sounds great. Looks great.
Great. So first and foremost, that bio is so old. And that photo, if you could see this versus that, very dated. I need to do some updating soon. I pretty much went all in with home health care probably around the time I did that bio. I was pretty much a generalist. Dawn kind of covered my background. I wanted to be a police officer back in the early 90s. It was really hard to become a police officer. I had to do an internship at school. I took a paid internship. Being a private investigator, I had a van with tinted windows. I had a camera that was like this big. The lens was this long, and I could film someone from football fields away. So as a 21-year-old with a per diem every day, I had a van. I drove around the country, pretty much the East Coast and the Southeast, and almost every case was work comp fraud. That's kind of how I got started. Kept talking to my friends. I had graduated the year before me. Nobody was having luck becoming a police officer. I had done some ride-alongs with the local police department. They had 1,100 people apply for 3 openings. So that's kind of how it was back in the day. So I had that opportunity to stay that path, work 80, 90 hours a week, have no social life. I had a job offer to work undercover at Motorola. I was going to bounce around from a manufacturing plant to manufacturing plant, reporting on employee theft and drug use. Or my mom was in insurance, and insurance companies have special investigative units. And I took that job, no questions asked. It was stable, 40 hours a week, gave me the ability to have a life, to date, to just do anything. So I handled claims, and I handled a lot of questionable claims. I did that throughout the 90s. The most miserable professional years of my life being a claim adjuster. I wouldn't wish it on anybody, but I got a lot of good experiences, helped me with my clients. In the 2000s, I got onto the agency side. The first time I ever saw an experience rating, first time I really got into policies and advocating for clients. And then I took the plunge, joined Lamb Little in 2009. I was a majority shareholder. We sold our agency almost a year ago in December to InZone out of California. But when I started at Lamb Little, I wanted to find a way to meet people organically versus cold calling. And I did a work comp presentation in 2009. And I was a generalist at that time. And I was, chasing manufacturers, contractors, et cetera. but there was a gentleman in the middle of the room who was very red-faced because I was talking about, we're talking about insurance 101, not workers' comp, but this is my introduction to your group, your network. I was doing a work comp presentation talking about how someone should be advocating for you, someone should be monitoring your claims, preparing you when your experience rating is going to go up. And that red-faced person was Bob Cook, who was a long-standing home instead owner. I didn't know anything about home instead. I didn't know anything about your industry. Bob was with one of the two preferred vendors. He didn't feel like he was getting any help, so he happened to come. I had a seminar at his occupational health clinic that the timing of it was perfect for when he was renewing his work comp insurance. So he came looking for answers. He was frustrated, and I helped him out. And then he introduced me to another owner, Mike Mellinger, who's still an owner. Bob sold a few years ago. Mike was with the other preferred vendor, and neither of them had anyone ever go over their insurance with them. And so I was intimidated because I didn't know anything about your industry. I didn't know what the nuances were, what your exposures were. And Bob was the one who was hounding me about, hey, can you look at my other insurance besides the workers' comp? And I'm like, I don't know what to do. I don't know what kind of coverages you need. This is 2010. I think we're about 2010. There was a guy in my agency who was considered one of the founding members of the National Private Duty Association. His family owned an agency, home healthcare agency. So he was the agent for Sheila McCracklin, I think, who was a president of the NPDA, which is now the HCAOA. He held my hand. He showed me what your exposures were. I worked with Bob. I worked with Mike. Mike encouraged me to go on the road and meet other owners. I currently work with between 90 to 100 home insteads, and I really did go all in with home health care. So this presentation I'm going to do for you today, I've done for the Home Care Association quite a bit during COVID. The genesis of this presentation was something I put together 5 or 6 years ago. I got Gary involved. With workers' compensation, there's no limitations to that policy. We're going to do that presentation next month. Between now and then, you're not going to go out of business because of your work comp policy. But if you are not covered for something on your other policies, if you're underinsured or uninsured, you could be out of pocket, and in some cases could put you out of business. So when COVID hit, insurance carriers started adding some new exclusions or bringing some exclusions that already existed to the forefront. So the intent of this, and by the way, here's my email address, and we'll have it at the end as well. And again, feel free to ask Dawn any questions. My intent is to go over all the coverages that I think that you're exposed to. I'm going to give you real life examples of claims. Majority of them are the ones that have impacted the home instead network. One that just happened 2 weeks ago is going to blow your mind. It's going to have you running for your insurance policy as soon as this presentation's over. So here's the goal in the next 45 minutes to an hour, probably closer to an hour. Again, Dawn's going to record this and put it on the website. But I want to talk about the core coverages and talk about real claims, suggested limits and recommended limits. Talk about some of these new exclusions that you may or may not know you have. And, at some point I'm going to pull COVID out of this, but COVID is the cause for some of these newer exclusions that leave you exposed, some of you exposed possibly. So where do you find your exclusions? They're usually listed kind of in the front of the policy. They look like this. Here's traveler's insurance, for example, and you'll see a variety of exclusions. Sometimes the exclusions are in there to remove it from one policy, but to give you the ability to buy it back. And then sometimes things are excluded that you cannot buy back. And we'll talk about some of those as we go through here. So here's the first slide. This is always the first slide in the presentation. I've been doing this presentation for 5 or 6 years. I used to blow through this presentation in about 5 minutes because in all the years I've worked with the network, I only knew of a couple of claims. The first one I ever had was it actually wasn't even a home instead. It was a flash flood in Indiana, and flood's not covered by the typical policy. So you'll see there at exclusions, virus, flood, earthquake. added virus because of the COVID, but flood and earthquake are pretty consistent exclusions on policies. You usually have to pay more for earthquake to get it back. Flood, sometimes you need to go through the government. So down in Florida, coastal areas, it can be very difficult to get property insurance, which is a struggle for me and a lot of agents in the coastal areas. So let's talk about something that happened a few weeks ago. So I'd say a third of the owners I work with own their buildings. But when I first started in 2010, majority of them were leasing space. So the only exposure you really had was to insure your contents, which is known as business personal property. But other times, if you own a building, you need to insure that the building. And during the last couple of years, the cost of construction materials has gone up and down, up and down, up and down. It's a moving target for how much you really need to insure your building for, but also your contents. Again, I used to blow by this slide, but I'm going to drag over a photo here. So 2 weeks ago tomorrow, I was driving to Michigan for Thanksgiving in my wife's car, did not connect my phone and the Bluetooth to her car. And we were near Kalamazoo, Michigan, construction traffic, holiday traffic, and then a 4-car accident, bumper to bumper. We were making good time, and all of a sudden we stopped and my phone was blowing up in the console. And I was actually, I hate to say it, I was a little annoyed. You kind of let your guards down that close to a holiday. And I thought, well, all right, that's the third call. I got to figure out what it is. I answered the next call, and the photo I'm going to show you in a second, I have permission from this owner to show this to you. I get the owner on the phone and I said, so-and-so, I said, is everything okay? I mean, you've been calling a lot in the last 15 minutes. And she said, no, things are not okay. My building is on fire. So this happened 2 weeks ago. And here I am feeling helpless, like I can't pull over. What am I going to do? She's looking for me to guide her. I was able to calm her down, get Sharon, my assistant, on the phone. She called in a claim to the insurance carrier. Probably within 15 minutes or half an hour, this owner heard from the insurance company. But what was interesting about this scenario is, here's her building. Okay, it didn't completely burn to the ground, but for the most part, it's a total loss. Okay, it was electrical. They figured out it happened at 10 o'clock in the morning on a Wednesday, the before Thanksgiving. So what didn't happen overnight. So here's the problem with this. It's not a huge problem. She was using a local agent to insure her building. She had her contents, her personal property, insured with me with the rest of her insurance. So we turned in a claim, but you got 2 different insurance carriers handling 2 different things, and there's some overlap, and you get some fighting between the 2. So one of the takeaways with that, which she and I agreed on, is we need to get all of that on one policy so that never happens again. But the big takeaway that I want you all to go look at your policy when you're done with this is look at what your insurance limits are for business personal property. It is one of the lowest cost on your overall insurance program, probably under $1,000, I would guesstimate. And and most of the owners I work with, usually one time we go over their contents and we say, all right, let's say you had a fire like this and you lost everything. What would it cost to replace? So when I met Bob, I kind of felt like the preferred vendors at the time were using a cookie cutter approach where they were just giving everyone the same limits. When I met Mike a month later, they both had the same limit of insurance. So I just asked them, what would it cost to replace everything? And what we did was we increased their limits. I mean, drastically increased their limits, but it wasn't a big additional cost to raise those limits in terms of premiums. So my take on it is I'd rather have you all overinsured, pay another $100 or $200 to be fully covered, because we had $90,000 of content coverage for this owner, and it's going to be enough to replace everything. Then her building insurance was Liberty Mutual is going to cover the reconstruction of the building. So don't overlook that, because it really did happen. Prior to that, 3 years ago, an owner I have, he used to own 7 franchises. He didn't own the building, but one of his buildings he was a tenant in, there was a fire, and he had damage to smoke damage and water damage from the sprinklers, but he didn't have a fire like this. The other thing that came into play with this owner with this fire, and then that owner who had the smoke and water damage, was extra expense. Both these owners had to relocate, one for 6 months, and we don't know about this new one, how long it's going to be, but there was enough insurance coverage to cover the additional rent to rent a new location. There wasn't going to be a disruption of business income, because both owners were able to keep working. But up until 3 or 4 years ago, I'd never paid attention. I mean, I always talked about contents, but I hadn't really seen any major claims. And within 3 years, I've had 2 homesteads completely displaced, and they had to get all new furniture. Some of them rented, some bought, and that was covered by the insurance. Equipment breakdown would be maybe like some things that aren't fire theft related, maybe like a power surge that disrupts your computer equipment. I don't see too many of those. I added virus as an exclusion. When COVID hit, there was already a virus exclusion in pretty much every insurance policy, but you saw a lot of restaurants try to file claims against their property insurance, claiming that virus was the disruptor of their business, and they were losing income because of it, and all those claims were denied. So I did add that, but flood and earthquake are really the main ones. So I want to spend a little time on that, because again, it's just, I'd rather have you overinsured. General and professional liability is where some of those exclusions are going to come into play. Early on, I'd say, 85% of my book of business is non-skilled companion care, and the bulk of that business is home instead. I have a lot of independents, some other franchises we work with, but you're non-skilled. Why do you need professional liability? That was a common question I used to get. So generally, you all, I would imagine, it have $1 million per incident per occurrence, and a $3 million aggregate in case you have multiple claims during the course of the year. So you've got general liability and you've got professional liability. The reason you have professional liability is there's an exclusion on most general liability policies for professional services. Pretty much anytime you're handling a client, helping someone off a toilet, out of a bathtub, and if they're injured, those are going to be professional liability type claims, which wouldn't be covered by your general liability policy. So you will see 2 separate premiums usually, but hopefully, I believe every client of mine has a separate silo for general liability and a separate silo for professional liability. So those claims feed from other things. Pure consent. Some insurance carriers let you have say in whether or not you settle a claim. Others don't. So it's always good to know. I like to see pure consent, but I can get away without it as long as the insurance carrier lets you still be part of the solution to resolving a claim. Here are 3 exclusions. Employment, and you'll see these, the communicable disease exclusion was already on some policies. It's just no one cared about it until COVID hit. But employment practices liability is a common exclusion. That's something that they carve it out, and then you could buy it back as a separate standalone policy. They could be between 3,000 to 6,000. We'll talk about that a little bit later on. The communicable disease exclusion, I had my aha moment. At some point, maybe I'll do a little scorecard with you about the different insurance carriers and where they stand about insuring this industry anymore. But I was getting a little more comfortable with Philadelphia insurance. I never, ever used them. They're very limited what they can do with their third-party theft limits. But I had some other carriers I thought were a little better with their service, claims handling, but also their coverage and their pricing. So I started getting comfortable with them in 2019, And I started to move some clients, some home insteads to them. And I gave my clients, here's the pros and cons of the carrier you're with, and here's the pros and cons of Philadelphia Insurance. It's a quality carrier, but they already had a communicable disease exclusion under general liability policy. And I didn't pick up on it at first. And we're talking April 2020 was when the light bulb went on for me. I'm going back and forth with my underwriter, and he's talking about an exclusion. I'm like, what are you talking about? And he goes, oh, we have an exclusion on our general liability policy for communicable disease. I'm like, what? I had never heard of that before. And sure enough, it was there. It was there before COVID hit. So I said, well, wait a second. Well, no big deal, because your professional liabilities policy is going to cover this stuff. He's like, yes, you're correct. And that's the truth. But Philadelphia said, well, we got to close that door too. So a few months later, they added a second professional liability communicable disease exclusion, fully closing the door on any type of defense. I have had 2 potential claims with the Home Instead Network for communicable disease. And one of them could be huge because a client died. And it was a 24-hour shift, East Coast owner. Anyone within my network knows this story because I've shared it before. Middle of 2020 in the summer, one particular caregiver chose to never wear a mask. And the client's son would come by and visit, and he would see the person without a mask on. And then the other caregivers in the other shifts would see the same thing. So eventually, caregiver came down with COVID, client came down with COVID, client died shortly after they both came down with COVID. And the 2 insurance, and then the other home instead, it was just someone got really sick. Both policies I had, it did not have this exclusion, and both were covering these claims. If you have this exclusion, you absolutely are on your own for defending yourself. From $1, Philadelphia does not need to defend you. Secura is a regional carrier. They have their general and professional liability on one form, shared limits. They're a regional carrier in the Midwest. They have this exclusion as well. Selective Insurance, who I still have home insteads with, they only have it on the general liability, not professional liability, but they do have it on their umbrella for the professional liability. So instead of having $1 million and then $1 million umbrella, with Selective, you've got $1 million. Hanover Insurance doesn't have any exclusions at all, but their rates have gone up for professional liability because they're defending these types of claims. Cincinnati Insurance, they added the exclusion to their general liability policy, but they pulled out of this industry. So I guess I'm kind of giving you the scorecard right now. Cincinnati Insurance only wants hospice. And if you're with Cincinnati Insurance right now, they are asking every renewal, if you do any Hoyer lifts, if you have one client and you tell them that, they're going to not renew your policy. They only want hospice business, and they're being very selective on who they'll renew. Okay, enough about that. I'm kind of getting tired of COVID, but that's the reality, is that it isn't just COVID. It could be a common cold, the flu, any communicable disease. And these ambulance chasers know that there are weaknesses in somebody's insurance policies. Okay, care, custody, and control exclusion. Hate to keep picking on Philadelphia, but Brian, the guy who helped me in the beginning understand this industry, he had a client who had a caregiver doing some housekeeping, and the caregiver knocked a very expensive vase off of a counter and it broke. And Philadelphia pulled this care, custody, control exclusion out of their policy and wouldn't cover that claim. So, and as far as I know, they still don't have a solution for that. So it's more of a nuisance than anything, where you would be out of pocket for replacing your client's damaged property. But most of my clients have coverage for that kind of baked into the cake. Sometimes it's a standalone couple $100 for that type of thing, but just know if you have that or not. Now, let me give you some claims examples. General liability is usually when you're not handling, touching the client. 2 good examples would be maybe starting a fire in the kitchen when you're cooking. Usually it's a property damage type of claim. Or if you have someone who's visiting your office, and they call it premises liability, kind of falls under the general liability umbrella. If someone's injured at your office. I've got a client who has a bunched up rug, and it's been that way for 10 years. And I always wonder, like, someone's going to trip over that at some point. If you're on this call, I'm sorry to call you out, but if you knew about that, you did nothing about that, you're negligent. And if someone was injured, maybe a candidate you were interviewing, someone was making a delivery, you could be sued, and general liability would protect you for that. Professional liability would be the handling of clients. Like the biggest one I think I have for the Home Instead Network happened a couple of years ago. The client got away from the caregiver. She locked herself into the bathroom. She pulled the ports out of her system, and she bled out and passed away, and we couldn't get to her in time. That's a professional liability claim. The two largest claims I've seen are not home insteads. They were both wheelchair claims. One caregiver left the client alone, and she could have easily said, hey, to the guy at the facility, can you watch this person? I need to go to the bathroom. That person fell out of the wheelchair, broke her hip, $250,000 claim, professional liability. The other one, client was unsecured in the wheelchair, fell. She had both legs amputated. And both these claims were selective. And because of these two claims, Selective said, we're done. Now we're done. We're never getting our money back in this industry. We'll grandfather, we'll renew some policies, but we're not insuring any more moving forward. And what happened in that situation was you had $1 million per occurrence, then you had $1 million umbrella. So you had $2 million worth of coverage. The attorney for the family said, what are the policy limits? So the adjuster said $2 million. So they said, well, give us $2 million. And then the adjuster said, we'll give you $1.5 million. And they just met in the middle. I mean, that easy. And they settled for $1.75 million. Okay. So those are the real claims I've seen. But the one that happened with the Home Instead, that was about a year ago, but it really it became a lawsuit recently. And but that owner is being defended by the policy. And then here's an example of what the exclusion looks like on the general liability policy. So again, if you have Philadelphia or Secura, good carriers, you just need to know that you have these. If I could have a policy that might be a little more expensive and not have it, I would prefer to go that route. But we were up and about talking about this, and then the Home Care Association started having us do webinars for them. And we started moving people away from Philadelphia back to other carriers. And a couple people said, you know what, it's a lot more expensive to move away from Philadelphia. I'll take my chances. So I've got a couple people, Home Insteads, left with them, and not too many though. But in Florida, they're the only option that I'm aware of that will do the property insurance in Florida for a Home Instead. So it's kind of a necessary evil. Dawn, any questions so far?
No questions so far.
You know, I know you said you were going to mute everybody, but I hear a lot of snoring. So I don't get it.
What?
Did you mute everybody? Okay, just want to make sure. Okay, crime coverage. This hands down is the most common claim that I see. So I report the claims for my clients for anything other than workers' comp. I do not report workers' comp claims because they're asking for a lot of personal information I'm not going to have. But I report these all the time, so I know what's going on. I get you the claim number. I get you connected with the adjuster. But I'm more hands-on with the workers' comp once I know they exist, and we're going to talk about that next month. But once a month, I get a claim for this. And I want to distinguish the difference between employee dishonesty and third-party crime. Usually you'll see crime as a separate part of the policy. And usually you'll see $100,000 for employee dishonesty. That protects you from your employees. A good example would be embezzlement. I have never, ever seen nor heard of that happening. Usually you handle your own finances, or someone you very much trust. Not to say it wouldn't happen, but I usually see that. Sometimes I see $25,000 limits, but I've never heard of or seen a claim ever. It's third-party crime. That's the one that I see all the time. I'm going to give you an extreme example of a claim that never became a claim, an incident that never became a claim. But essentially, I think most of my clients, we have at least $100,000 worth of coverage. Philadelphia can only do $25,000. So if I have someone in Philadelphia, I do a separate bond. That's the one thing Selective will still do is a standalone bond, and it's cheap. And I do that for most of my clients if they're with Philadelphia. So probably for the same price as Philadelphia, I get them 4 times the coverage, same deductible, $1,000. I've got some clients that have 250,000. Okay. But usually it's jewelry missing, cash missing. What you have to do whenever you have an allegation from a client is you need to tell them they need to file a police report. And I tell you, when you do that, a lot of these claims go away. And unfortunately, sometimes they don't go away. The police get involved, and then the jewelry shows up, and it happened a couple weeks ago, and it happens often. But sometimes it's truly, no doubt about it, the caregiver stole. So here's a story I told, and this might shock you all. And I've never seen it before or after, and it did not become a claim, but let me tell you the brief story. So one of my clients in the Midwest, kind of in a rural area, not near a major airport, called me, and I was at the hospital. I was taking my kid to the doctor. So I was in the parking lot talking to him. And this was a situation where I truly feel that half of these claims, you have a caregiver that starts off with good intentions, but then sees the opportunity as time goes on. And it also feels like, I'm not being paid enough. I really am the family for these people. So that's what happened in this situation. It started off with the client telling the home instead owner, you're not paying the caregiver enough, and I'm going to pay her. And it's a big no-no. Okay, it's a big no-no. But eventually she let the caregiver get a hold of her credit card, and then she started shopping with it. And then eventually the caregiver brought her daughter in, and then she started shopping. Then eventually the caregiver got put on the will for $25,000. And then eventually the client died, and then the family found out all of this. So here we are, client Midwest, son who I end up talking to the son. And the son is a veterinarian in California, and then the daughter lived in Boise, Idaho. So neither lived anywhere near here. And then I talked to the son, very nice guy, very compassionate towards him. But I said, you have to file a police report. The home instead can't do it. They're not the victim, you are. And he said, you know what? I'm going to let it go, because me and my sister, we cannot keep coming out there, flying into this one airport and then driving 3 hours to court dates. And they let it go. The caregiver knew she was busted. She fled to Georgia and she got away with it. Nothing happened. So I had wondered, because I mean, the theft that would have been covered for sure would have been the use of the credit card for Amazon and all that stuff. But I wondered about the will. And I also will talk about another coverage where I wondered where that would have came in. Okay, 2 more things, food for thought on this. Selective has that bond. Their intent is to cover on-premises theft and off-premises theft. And I think most crime coverages do. But sometimes I find a bond like Hartford Insurance. And I haven't asked them in the last couple of years. For 5 or 6 years, I asked them. And their intent was only to cover theft on premises. If someone stole cash or jewelry, they cover that. If they took a credit card or credit card number or a checkbook out of the house, they wouldn't cover that. So you need to know if you've got off-premises theft. Philadelphia, yes. Cincinnati, yes. Hanover, yes. Selective, yes. Hartford, no. One thing. The only exclusion that I've ever seen on any policy, and it's consistent on all the policies that help you decide if, when you get a criminal background check on one of your employees, if they're insurable or not, is on a crime policy. And it reads like this: knowingly hiring someone who has committed theft or any other dishonest act. But they don't define dishonest act. It's kind of broad. So I attribute that to shoplifting, writing bad checks, and those are problematic. And I get emails from clients all the time: is this person insurable? But once in a while you get someone who 30 years ago was desperate, young, shoplifted. I'll go to bat I will email the underwriter, and 9 times out of 10, they'll specifically say that person's insurable. You can put it in your file when you get audited by corporate. But other times, I've told an owner, I'm like, listen, if you want me to tell you they're insurable to get, I mean, I probably shouldn't say this, but I do, and I've done it. If there's a good story there, we'll do that. And then if you get audited, that person doesn't need to be fired. But lately, I've been kind of weaning away from that because I'm no longer Lamb Little. I'm no longer a majority shareholder. I am a minority shareholder in a bigger organization, and I don't feel as comfortable doing that. But you just know about that, because if you see shoplifting or theft, especially in the last couple of years, that can be used against you where they wouldn't cover a claim. Okay. Any questions, or just more snoring?
No,
Okay.
I have two questions.
Oh, you do? I
Yes.
woke someone up.
Just after you asked me the last time, a couple popped up. Okay. So the first question is, if an incident is covered, does that mean legal costs are also covered as well?
Yeah. Now, is that specific to crime?
No, it came in, I think, about 6 or 8 minutes ago.
So yes. So that will include your legal expenses. Sometimes though, the legal expenses are outside your limits. So like you might have $1 million worth of coverage. If you got 200,000 legal fees, it's not included in that 1 million. I think most of the carriers we work with do it outside the limits.
Okay. The next question is, your example of the plaintiff attorney asking what home instead limits of liability is. I had a potential lawsuit early on in my business, and that question was asked, and I only had smaller amount of insurance, and the plaintiff attorney just moved on. Apparently didn't think it was worth his time. At what point is too much insurance a negative?
That's a good question, because I mean, I actually have had that conversation with people, because I had people asking for higher umbrellas, which we're going to talk about in a few minutes. And I think that if they ask, if a lazy claim adjuster is just going to volunteer that information, and they're going to shoot for the moon. So, but the reality is that we're going to talk about abuse and molestation, and a claim that wasn't a home instead, but if it became a claim, it's going to be a big one. And the umbrella does not go over the abuse. I am comfortable, and with over 10 years of experience with the Home Instead Network, I have heard some stories, but they've all been solved using the per occurrence and whatever the umbrella is, which is usually $1 million. I do have some owners that have, if you've got multiple locations on one policy, you probably should have a $2 or $3 million umbrella. And it's a little bit more money, but it's more peace of mind. But yeah, that's a very good point, that a lot of adjusters will give that information up, and then they're going to ask for the whole thing. So I hope that answered your question. Was there any more on that one?
No, that was it. I'll let you know if anything else pops up.
So abuse and molestation, I still haven't seen a real claim. I've had a couple incidents, and I had one that was crazy. And first and foremost, I'm noticing with all of our insurance carriers with renewals, they're really asking a lot of questions about abuse and molestation. What are you doing behind the scenes in terms of training? Do you have a written policy in place? Does your application ask for priors? I mean, some states you probably can't. Chris Irons is an owner who we worked together, and I gave him some resources, and his team put together a very comprehensive policy. And he said he was willing to share with anyone within the network. And I really like what he did. And I gave him the tools, but they executed. So I can help with that. Do you have a written policy in place and some other things? And all the credit goes to Chris Irons out of Indiana and his team. And probably a lot of you know him. He might even be on here. Most umbrellas, Selective will go over the abuse and molestation at an additional charge. Hanover won't. I'm not sure about Philadelphia, but a lot of carriers don't. I got to do a little drag over here. And this kind of talks to the person who talked about having low limits. So I told you that story about Brian holding my hand early on. Let me see if I can increase the size of this. Okay. Philadelphia Insurance. Look how old this is. This is 2010. This is when I first got into working with Bob Cook. I met him, I think, at the end of 2009, and he renewed April 1st. So I was working on his insurance, And I asked Philadelphia, and by the way, Philadelphia, great carrier, just some restrictions you got to know about them. At that time, they had the lion's share of the business out there. So they were willing to give me all this loss data, and I had to remove the particulars or whatnot. And you'll see right here, you'll see this claim for $356,000 for an abuse claim. So in the beginning, when I met Bob and Mike and other owners, it was not uncommon for me to see two different limits. One was 100,000 per occurrence, 300,000 aggregate. But the more common one was 250,000 per occurrence, $250,000 aggregate. And again, no umbrella going over that. If this claim happened to you and you had those limits, you're out of pocket, whatever that difference is, and then you have no more money to cover any future claims. So Selective Insurance, who I started using at that time, they automatically offered $1 million per occurrence, $3 million aggregate. I cannot write a new policy with them, but I do have a lot of owners still with them, and I've never seen it used before. And again, if I needed to put the umbrella over it, I could. But at a minimum, I think every client of mine has $1 million, but most have $1.3 million. Okay, still haven't seen a claim, but check this one out. This is not this one was, it was not a home instead. It was a client of mine on the West Coast. It happened about a year ago. So, and he sent the email to me with all the details to my Lamb Little email address. So now I sell to InZone in December, last December. And what I do is I'm trying to transfer stuff from one email to the other. And InZone kept rejecting the email I sent because of the content. And just, I won't get graphic or details. Essentially, it was a male caregiver with a female client who couldn't defend herself. And he took advantage of her, abused her sexually, and he brought a friend along. And that really happened. And I don't know why it hasn't become a claim yet, but if it does, it's going to be a big one. And that person's going to have $1 million worth of coverage. And so we'll see what happens. It was a while ago, maybe nothing will happen, but I have not seen one for home instead. So let me drag this away. So I wanted, that's, and the California abuse claim example was what I showed you on that loss runs. So this one I could spend all day on. This is the one that gives the biggest heartburn to insurance carriers. Your caregivers use their own vehicles and often. And do they have high enough limits? You know, because what happens is the insurance follows the car first. So let's kind of go through all this really quick. And again, we'll be done. I think we're on line to be done in the next 3 hours. 15 minutes. Hired versus non, I'm just going to kind of go one by one. Hired versus non-owned auto. It's a $1 million liability limit. Hired is if any of you flew to Omaha for the convention, you rented a car, which you don't need to in Omaha. When they ask, Enterprise says you want the insurance, you say no, you've got the liability coverage. And then I think some of these carriers throw in physical damage. You don't need the insurance typically with Enterprise. The big one is non-owned auto. The biggest claim I've heard of wasn't a client of mine, but it sent an insurance carrier called Markel running away from home health care. They've never come back. This is like 6 or 7 years ago. Northwest, I think in state of Washington, caregiver makes a left-hand turn in front of a motorcyclist. He survives, but is hospitalized. It's a plus $1 million claim. This person only had $1 million worth of non-owned auto coverage and no umbrella. So it definitely went over $1 million, but Markel is on the hook for $1 million, and they're collecting maybe like $700 in premium. And they said, we're never going to recover from that. They're out and they've never come back. Okay. What's happening now is these insurance carriers, State Farm, Farmers, Allstate, they're wising up and they're realizing that people, are using their cars to deliver Jimmy John's, caregive for business use. And some policies have a business use exclusion. And if they kick that in, your caregiver's insurance is not going to cover the claim, and then your insurance is going to drop down. So you've got $1 million of non-owned auto liability, and likely, unless you're with Locked-in, because they don't usually automatically include an umbrella, you'll have $1 million umbrella on top of that. So essentially $2 million worth of coverage. Caregivers driving their own vehicles or clients, the insurance follows the vehicle. As awkward as it is, if you use a client's car and they have permission to drive it, 100% of the time, their insurance is going to react. There's no exclusions. They have permission to give permission to your caregiver to drive. So their insurance reacts first, then the driver, your caregiver, then your insurance, and then your umbrella for 4 layers. Very awkward. If and this happened, caregiver driving a client's car has an accident. I believe built into your contract with your clients, it clearly points out who's responsible. And in fact, I had to be the bad cop once, where a former owner who sold, he drafted the letter, and it was a caregiver driving a client's car, and he incorporated the language in the contract into the letter, and then I was the guy who sent it to say, hey, listen, I'm sorry it happened, but look at this contract language. You need to turn a claim into your insurance. So it is awkward, but you're going to be covered. Okay. Who pays for motor vehicle records and how often? Usually you do. I've heard some owners actually had, in the good days when there are a lot of caregivers looking for jobs, some people actually had the caregivers bring in their MVRs. How often? I can tell you right now, at a minimum, every insurance carrier wants you doing them every 3 years. Some would want you to do it every year. If in a lot of applications ask how often, and if you don't do them at least every 3 years, some carriers will say no. So, by the way, as we're talking about applications and whatnot, I don't fill out applications for my clients. I'm not going to be that guy. If I ever did, I used to do it. I would send it to them before I would send it to the insurance company. If you have an agent that does your insurance applications for you, you might want to look through those, because I've seen a lot of dishonesty where people answer yes when they should be answering no, because it could terminate your insurance. It's always good. Hey, you sent something in for me. Can I see that, what you sent in? I want the email where you attached it. I want to see that. Okay. But here's a good story. That same owner who had that caregiver driving a client's vehicle had a marketing rep working for him. He hired her, he ran the MVR, and didn't do it again. And eventually we added her to the policy. The Selective Insurance pulled her MVR. She had 3 speeding tickets in 2 years. And he didn't know. So the insurance carrier said, we're going to, we're actually going to exclude her, and it put him in a tough spot. He needed her. So it's not a bad idea to do that. Driver guidelines for you and a carrier. Let me drag over. It's my last dragging over. I have this for Hanover. I've got one for Philadelphia and one for Selective. You will not find this anywhere on your insurance policy. Nothing on your insurance policy is going to tell you who's insurable, who's not. I'm happy to send this to you if you're with any of those 3 carriers. Even if you're not, they're all pretty universal. And if you give this to your staff when they're checking MVRs, if you follow this, then you're hiring drivers that would be acceptable to the insurance company. So here's a couple updates with this. Insurance carriers usually only do motor vehicle reports on people that drive your company-owned vehicles, not the caregivers. However, Philadelphia Insurance, one time a year at renewal, they're asking for a list of your drivers or your caregivers to drive. It's a new thing. They've been doing it for about the last year. So it's simple. Just run a report for the last month of who you reimbursed mileage for, give it to them. But they are doing it for caregivers, but no other carrier is. Okay, so let me pull this away. It's really important for you to understand what your state minimum liability limits. The first non-owned auto claim that I had was one of the owners in the Midwest. Caregiver was driving to the assignment, hadn't clocked in. The limitations were, it was Indiana, not Chris Irons, $25,000 per injury, $50,000 for multiple injuries, $10,000 for property damage. She hadn't even clocked in yet, driving down the street. A kid with a challenged boy drove a motorized Jeep into the side of her vehicle. They collided in the street. He broke his arm, and she had Geico. She had the state minimum in Indiana. Geico said, broken arm, mentally challenged kid, we're paying the policy limits, and they wanted more. The family wanted more. So we turned the claim into selective. They dropped down. They paid another 20-something thousand out. So it's important to know. What I recommend is create a spreadsheet and don't ask them to bring their auto ID card that they pull out of glove compartment. It doesn't give you any limits. Have them bring their actual policy and their declaration page. It will show the limits. So then you can create a spreadsheet. You'll know what the limits are. And maybe someone who needs to be transported quite often, you give to a caregiver that has higher limits. The recommended limits that all carriers would love to see, 100,000 per 100, 300, 100, 100,000, 300,000, 100,000, 100,000 for an injury to one person, 300,000 for multiple injuries, 100,000 for property damage. Okay. So that's what most people would like to see. And you might be surprised if you do that exercise that more caregivers have higher limits, or maybe you could educate them on that. Drive other car coverage. I keep picking on this guy who sold from Iowa, and I still talk to him, Steve Habenik, great guy. And I learned from him about this. Sometimes some of you might rely on your company-owned vehicle as your main source of transportation. You might actually have a personal policy. So this is 10 years ago. That's why and he's sold, and he and I still talk. I saw him a year ago. But I learned from him that he was exposed because he didn't have a personal policy. So if he were to borrow a friend's car and have an accident, his friend's insurance would pay first, but then they would go towards Steve and say, hey, we want something for you to kick in, and he would have nothing to kick in. So if you're in a situation, which I don't see often, but does happen, drive other car coverage is a very cheap way to have you covered if you rent a vehicle or use someone else's vehicle. And this is really important. Are wraps covered? Wraps are not automatically covered unless they're part of the purchase price. So if you buy a wrapped vehicle, that's fully covered. But if you buy a vehicle, insure it, then add a $2,000 or $3,000 wrap, and you have an accident or a hail damage, they replace the wrap, it won't be covered. So it's really inexpensive to add that, but don't assume you're covered there. Okay, we're winding down. We'll get done here in probably about 5 or 6 minutes. There's more slides, but I'm really going to go over the relevant stuff. The umbrella. You all saw the email from last week. It really ticked me off because they gave option A, option B, option C. Every client of mine from day one has had an umbrella. Okay, one of the preferred vendors didn't offer an umbrella, and you had to ask for it. What they did was it was smoke and mirrors. We're going to give you higher limits for general professional liability, 2 million, 3 million, 2 million, 4 million, the equivalent of having an umbrella. But that didn't solve the problem of what happens if you have a bad auto accident. You only have $1 million worth of coverage. You lose that by not having an umbrella. And there were probably some people cutting corners and not having an umbrella. I would freak out if I had a client without an umbrella. Selective insurance in the Northeast, Bill, some of you on this call might remember 2 or 3 years ago, Selective said, you know what, we're having some bigger claims in the Northeast. We are going to remove the umbrella. So I had to scramble and replace all the home instead coverage in the Northeast to other carriers to get an umbrella to have peace of mind in that coverage. So, and again, it does not go over, it's usually $1 million. Some owners have a little bit more. It goes over general liability, professional liability, and auto. Does not go over abuse. It might with some carriers, again, not Hanover. So just so you know, EPLI, employment practices liability. These are examples of real claims I've seen. I've had 2 wage and hour defense claims, but essentially, it's a separate policy. Again, usually $3,000, $4,000, $5,000, $6,000. Where you pay the price is if you have a claim. The deductibles are usually $10,000 or more. I mean, I've seen some go as high as $35,000. I've seen all of these claims over the years: wrongful termination, 2 wage and hour claims, discrimination, harassment. I've had a couple male owners be accused of sexual harassment by female employees. Again, usually higher deductibles. The last couple of slides are cyber. I'm not going to go too deep in the weeds on this one. I can count, if I've got 90 to 100 owners, I can count on 2 or 3 fingers how many people have this policy. It was dirt cheap in the beginning. I have yet to see a claim for this industry, but I do have some manufacturing clients. I do still have some of my older clients, and I have seen some of them victimized by social engineering, getting like a fake invoice and paying it, a fake order. They manufactured parts, and then they realized, oh, we got duped. But you know, these are the things that are covered. I'm telling you, that policy probably pre-COVID was maybe under $1,000 for most of you. Now it's as high as the employment practices liability. Maybe some of you know of a claim. I don't, and but I do tell people about it. But I only have 2 or 3 owners that have it. You know, and what you're seeing now, especially the crackdown, is multi-factor authentication. It's a requirement. If you don't have that, you can't even get a quote for it. But you know, it's something that I might quote it a lot, but I don't write it a lot for the network. So Dawn, that's it. I'm open for more questions. There's my direct phone. If any of you don't work with me, this is how I meet people. It's how I met Bob Cook. I would be happy to do an analysis of your policy. I know what I'm looking for. I've already kind of covered it in here. I could probably do something in 10 or 15 minutes. And I'd be happy to. And then I'm really looking forward to the work comp presentation next month as well.
That's great. Thanks, Dennis. Yeah, I was just going to ask the same thing. Like, you know, a lot of people may, because I don't have any more questions at the moment, but people may, you know, walk away from this presentation and think, oh, I wish I asked this, or, you know, something comes to them later. So it's okay if they reach out to you, right? There's your contact information. People can reach out to you with questions.
Yeah. By the way, I want to talk a little bit. Yes, for sure, Dawn.
Okay, great.
I asked Bill, 3 of the first 4 home insteads that went full ops were visionaries, were my clients. And back in April, I want to talk about the insurance for someone who, just in case you're curious, now we've talked about all these different coverages, okay? Literally, I only know of one insurance carrier willing to insure an owner that chooses to go full operations. And it's none of the carriers we talked about. None of them want any part of that. And here's the rationale: is they have a joint service agreement between the home instead and Honor Technologies. Both names are on there. The home instead owner no longer has any control over the employees. If something happens with a client and the caregiver, they're going to sue both names on that contract. Okay. But the home instead owner is no longer the employer, isn't paying the workers, paying a workers' comp, isn't hiring, firing, training, etc. They will be dragged into the lawsuit. It's a no-win situation for any insurance carrier that can get dragged into it. In April of last year, or this year, I went down to Arizona. I spent about an hour at the airport using my phone with corporate legal for home instead and for Honor, talking through this process, telling them I'm having a heck of a time finding carriers. And there's one carrier, and I'm still not so sure they know what they're insuring. So if you're thinking about going that route, it is not easy to find insurance for that. In fact, true story, Philadelphia Insurance right now, since July, will not write any new policies for home insteads, thinking that everyone's going full operations. The guy who chose to do that has been on vacation for 2 weeks. He comes back tomorrow, and I'm having a conversation with them, hopefully Thursday or Friday, to say, are you crazy? There's only a handful of people doing this. You're shutting out an entire network of people, giving them one less option because you were given bad information. So I just wanted to talk about that really quickly. There is some savings with your insurance if you do it, but there's only one option. And again, a California owner called me and said his agent in California got something in writing from a higher up of that insurance carrier, said, we didn't know about this arrangement. So I don't know who to believe, but I know I made a lot of calls and people said, no way, Jose. So end scene. Thank you for having me. I hope people got something out of this. I'm here for next couple months. I hope to crash a party again in Omaha if there's going to be a party to crash. I usually go there, but this is how I want to meet people, is to help this network out. You all have been so good to me over the years, and I become friends with so many of the homestead owners. So any way I could help.
Oh, we appreciate that, Dennis. I mean, thanks for being a partner of the association. We appreciate your expertise, your time. And I know everybody's just can't wait for the workers' comp presentation coming up in January. So if you all haven't signed up for that, please do so. I'll be sending out reminders and registration links. I think we've got maybe 15 to 20 people signed up already. Yeah, and I just want to thank everybody for taking time out of your day, our association members. Hopefully you thought this was helpful. Feel free to send us any feedback. You can just email the info. So it's info@iaohif.com, and those all come to me. Love feedback, and especially if there's other webinar topics you'd like as we, do some educational planning for 2023. So Dennis, thank you again. Appreciate everything. I know we'll be in touch. Happy holidays to everybody, and hope everybody has a great rest of your day.
Yeah, new posters next year, by the way.
All right, posters next year.
New ones. Bye-bye, everybody.
All right, thanks everybody. Take care.